Hi, everybody, and welcome to another episode of The Bulls and Kangaroos. We've reached a landmark episode, episode 10.
Yeah,
Steve, how are you?
I'm all right, Peter. Episode 10, hey? 10 weeks of
Yeah,
me getting up early and you staying up late, but we've made it to 10.
we've
Well
made it to
done.
10, that first landmark. Yeah, well done, buddy. So, how's your week been?
Oh, God. Well, you're going to find out in a minute, aren't you, when you watch this video? But trading wise, I had three losing trades in
Right,
relatively quick succession.
okay.
But apart from that, the learning experience, which you'll see now anyway. So.
Yeah, okay, we'll come on to that. And away from work, anything exciting going on?
Oh, I've got a race this weekend, so I've been sort of just relaxing a little bit in lead up to that. So we'll see how we
Brilliant,
go on Sunday.
brilliant. Looking forward to hearing all about that. And for me, yeah, it was a busy old week. Work, and then I was away for a few days. Went back to Ireland to
That's
visit
right, yeah.
family, so that was really good. So back to work. I was back to work today, and sort of get back into my routine.
Good
So
man.
without sort of further delay, let's jump into your video this week and hear about these three losing trades.
Okay, what I wanted to share with you this week was during the last week I was in three trades, and on this occasion all three of them were losers. I'm going to just talk you through briefly the trades themselves so you can see what it was that I was involved in. But it's really around about the preparation and the work that you do before you start trading live that I want to touch on. So this first one that you'll see on the screen, and these are just screenshots of the trades. This isn't on the live charts, so you can see I'm just showing you a snapshot of how the trade was set up for me. So what I was looking for was this little channel here. I was looking for a break below that line. I got that, and then I got this retracement down to this level. And then I thought to myself, okay, if I pull back up into structure, I'll look for a reason to get short. And all other things considered, I got a 3 bar reversal, and so I placed a short order. My targets were set back down at this level, this buy limit order here, and the stop loss was set at 5 pips above the high of this range. That's all in accordance with my rules. But what happened is price just carried on and it took me out straight away at that one, at that stop loss there. The next one I had was on the Kiwi Swiss, and this was an advanced pattern trade called the Cipher pattern, and it looked like a pretty decent setup to me. So I got the X to A leg, A to B, B to C, big long wick down here, and then the D completion, which was just, well, not too far away, but from the B point, but it made the pattern, it was a compliant pattern formation. And on this occasion, price just carried on and got close, but just took me out in the end. Okay, got close to stop loss there and then took me out. I had a similar pattern at around about the same time as well on the Aussie CAD, and you can see that there's some similarities in this setup. We've got a decent X to A. It looks like we've got decent bearish movement down, consistently moving down. It looks like a nice clean X to A leg, and then as I draw out the pattern, I get triggered in the trade on this large bullish candle, and really price didn't look back. And again on this occasion, went and stopped me out. Now, last week or the week before, Peter was talking about the importance of record keeping, and I want to touch on that as well. Um, when I had these three losing trades, and in relatively quick succession as well. So two was stopped out on one day, and the third one was stopped out the following day. It feels like a bit of a bit of a body blow, a bit of a combination punch going on. And so your immediate reaction is, oh my God, the system's broken, or I've done something wrong. I'm going to have a look at those patterns. Did I really see that as an X to A leg? Have I just forced the pattern? So your mindset can quickly turn to a bit of self doubt, I suppose. But as Peter said when he was talking about his back testing, and he was talking about how you keep the records, because then you can start to look back at how your strategies performed, and it can at least give you a bit of a foundation around what you can expect in general terms from your strategy. So I looked at this and I thought, oh my God, 3 losing trades in a row. Let me go back to all the back testing results that I had. And when I pulled those up, I saw that on the 10 years that I'd back tested the strategy, I had positive returns for every year. And that was even when I looked at the maximum consecutive losing trades. Yeah, so the maximum losing trades in a row, maximum consecutive losing trades, there was 7 losing trades. So, when you compare what you've back tested to the reality of what you've got going on live and what you're experiencing live, it's just the back testing results give you almost a framework, or an environment within which, as long as your live results are within that framework or within that environment, you can have some reassurance that you haven't completely forgotten what you were doing, or you've gone back to make some real beginner mistakes. And it's just I just thought it was a good example of this, a live example of what can happen when you sort of see a few trades going against you, and how your mind might work. And you can, as I said, that you could go into a bit of a doubting mode, but just wanted to reiterate and just link it back to what Peter's doing in his videos, how he's taking you through the steps of how you should be recording your results, and you're noting down any characteristics or any information that you think you might be able to use in the future. And just logging your consecutive losing trades is just one of those little pieces of information. So we're not happy that I had 3 losing trades in a row, but that's the system. It's working within the parameters of the system. There's no need to panic just yet. I just keep turning up, keep doing my analysis, and well, if anything, I'm closer to a few wins.
Okay, Stephen, 3 losing trades, as we were saying. So can you recall and sort of maybe share with us how you were feeling? Probably not so much after the first losing trade, because you kind of expect that, but how were you feeling after that second and third loss?
Because 2 of the pattern trades looked quite similar, and the price action and the movement. After I saw the first one lose, it looked like the second one was going the same way, so I was almost anticipating it. And
Mm-hmm.
you do think I might just get out and just call it a day, but you
Mm-hmm.
don't. They're just fleeting thoughts, because I've been through the routine so many times that I just have to accept that when I set the stop loss at where I thought, at a reasonable level, that was the commitment I made, and that was
Mm.
that. I'd already sort of spent that money, if you will.
Yeah.
So yeah, just watching it over on a 4-hour time frame is not painful, but you start wondering whether there's a bit of inevitability about it. It's just going to hit your stops. But then again, you
Mm-hmm.
can watch other trades on other times, and you can think the same thing, and then it turns around, and you're away and you're in profit. Um, so a bit of inevitability was one of the thoughts that I had, and
Mm-hmm.
then after the second one went, and then I was looking for the third. I stopped looking then. I mean, I was checking in at my allocated times, but I wasn't looking
Mm.
at any other time. It was just going to be what it was going to be.
Yeah, yeah. And you were saying there that you felt there was an air of inevitability about the about those trades we're going to lose. I mean, what's 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 ways, you've talked about that you saw from your system there that you've had seven losing trades. So how do you go about mentally separating yourself and just sticking to the rules and just having that, like, that robot mentality of looking at things as zero and ones, as one of our mentors would say?
I Because all of the thoughts are in percentages and not like, well, mine's Australian dollars, but and not in dollar amounts. I'm never thinking about how much in monetary terms I'm losing, because we've been taught to think in percentages because it's relative to your account size. So
Mm, mm,
I just follow the process, I suppose. I just
mm,
try and detach myself from the you try and detach yourself from being in the moment of the trade
mm,
and
mm.
just follow your process. Um,
Yeah.
you have to check in with yourself as well to make sure that you're not doing something silly or emotionally charged. But
Mm,
I think it's taught me, following the process and trading, it's just taught me to just take a little step back now and then and just
mm,
go back to your trading plan, have a read of your
mm,
notes. What am I going to do? What am I supposed to be doing in this situation? And just, yeah, it's the process, isn't it? It's the process, because no individual trade is going to be a maker or breaker. Yeah,
mm,
we're
mm,
dealing with like large numbers and sample sizes. So over time, that's where you see your results. So
mm.
in each individual trade, you just follow the process. Yeah.
Hmm. No, I think what you said there as well, which was a really, really good point to make, was just to take that time to step back and, you said it there, read that trading plan. I mean, I
Yeah.
think having that trading plan there is, and
Yeah.
it's something we're going to be talking more about in other episodes when we get to that point, especially from the back testing, when we go and put together a trading plan. It
Yeah.
is just so important, and it does. You're right, Stephen. It does. It just makes you take a breath and you go, "Hang on a second. Let me just have a look at my trading plan and what am I supposed to do?" It's almost like like a fire drill. If you get a
Yeah.
fire drill at work, what you're supposed to do when X, Y, and Z happen. X, Y, and Z happen, and you go to your trading plan and you read out and go, right, boom, 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 boom. Am I following those things? Yes, I am. Tick, tick, tick. Okay, I'm not going to panic. I'm not going to stress myself. I'm not going to worry, and I'm just going to keep on going.
Exactly. And like you were saying, and how I mentioned it in that video there, um, you need to record all of the results from your back testing, so you've got some kind of reference
Mm.
point for what you're seeing
Yeah.
in real time. If you've got no back testing results, you don't know whether what you're seeing is to be expected or whether it's a completely new experience. Or so
Mm.
it just gives you a bit of backup confidence that you've done some
Mm.
work, and what you're seeing,
Mm.
is part of an overall bigger picture.
Yeah, yeah. I really do hope that some people here have really sort of tuning into that point about, they're starting to see how all of this is starting to pull together and the importance of, the back testing. And when you move to demo trading and then into what you're doing now, the live trading, it's just starting to see how all of these points start to merge together, and they're all so important. They're all bits and pieces that build us to being successful traders.
Yeah, absolutely,
So
mate. Absolutely. I
yeah,
mean, you can't just jump from zero to live trade. It's castles made of sand, or foundations of
yeah, yeah,
sand, isn't
yeah,
it?
yeah, yeah. Yeah, you've got to have all those foundations in place and just follow that whole
Yeah,
structure and follow all those rules.
yeah.
Well, for me, as I said, it was very much a different week for me, but I did get an interesting question from a
Go
guy
on.
that I know.
Yeah.
Yeah, it was quite an interesting one. He just said to me, I was just having a chat with him, bumped into the street, we're having a chat, how's things? And he said, "Oh, Peter," he says, "you're into the trading." He says, "I do a little bit of day trading myself." He says, "What do you think is going to happen with the dollar yen this year?" And I went, "Well, I
Oh,
don't know."
Yeah. That's a funny one, isn't it? Because I suppose when we were just chatting there before, to the layperson, that might seem like a valid or just a decent question, mightn't it? What do you think is going to
Yeah.
happen to the dollar yen? But when we think about that question, we're not thinking of like long-term predictions for like future price levels that might be achieved or anything like that.
Mm.
We're doing our technical analysis, aren't we? And looking
Yeah.
at price levels and price action. And yeah, it's a funny one, isn't it? Go on. So how did you
Yeah,
respond?
that's well, I just basically responded, well, I went, well, I don't know. I said, I just went on to say that I said, look, there's various different types of traders in the marketplace, and they're all going to have their own opinion based on their style of trading, their type of trader that they are, and the rules that they have behind that trading. That's what's going to dictate what they do. I mean, as I say, we're technical guys. We work off technical levels, technical indicators. Where there's other people out there working with fundamentals, and they're
Yeah,
working off what the news is going on in the market, and if
yeah.
there's a bank announcement or some interest rate. And so our opinions are very, very different. So I really thought it was quite an interesting thing, and it just it's an impossible question to answer.
It is, and like you talked about the news and any news related, and we were just chatting there. There was an announcement from the Bank of Japan
Yeah,
yeah, yesterday, and we saw I saw on my 4 hour one candle move with a range of like 500 pips, and it's just so you're planning. I've been watching the dollar yen for weeks now, and we've talked about it, trying to get a bit of a pullback and looking for the next movement and looking for a pullback because I haven't got a breakout trade in my
yeah,
repertoire just yet for that pair. And then you're sitting there waiting, and then bang, it shoots up 250 pips, shoots down 250 pips, wipes everybody out.
yeah.
And then
Literally wipes everybody out.
you just have to sit and wait and for everything to calm down, don't you? But I mean, going back to your point, what do you think, or your question, what do you think the dollar yen is going to do this year? I you can't answer it with a straight answer,
No,
can you?
no,
It's
and
going to
and
go up and it's going to go down, and
yeah,
there possibly might be some sideways movement in there as
yeah, yeah. And to be honest, I know it may even come across a bit strange or to some people, but we don't really care what the dollar yen does because we kind of, we know the ebbs and flows of the market, and all we're
yeah,
waiting for is those patterns
yeah,
to repeat themselves
that's
because history shows us that they do repeat themselves. And so
and,
we're
uh,
just sitting here on the sidelines and we're just waiting until everything lines up that allows our trading rules to engage. And that's
yeah,
what I sort of said. The guy said, well, and I'll stay out of the market until my trading rules tell me I can enter the market. Then I'll
yeah.
enter the market. Until then, I'm just going to sit on the sidelines and just
And try and wait for the
let
trade to come to you.
yeah, exactly. And I think that's a really important point as well, waiting for the trade to come
Yeah.
to you rather than be sometimes hunting for a trade, which is, as we know,
It,
is
it's easy done though, mate.
dangerous.
It's
It's
easy
so
done when
dangerous.
you've been sitting on the sidelines for long enough, isn't it? You
Yeah,
start potentially seeing patterns where there aren't any, um,
yeah,
and that's a natural human tendency to because our
yeah,
brain simplifies the world and looks for patterns in things. And if you've been
yeah,
waiting for a while, I think, yeah, I've been guilty of that. And then on
yeah.
reflection, looked at something and thought, what was that?
Yeah, yeah. No, but you do hear. I mean, I've heard this same person. I won't mention them, but I've heard them mention. Oh, yeah, well, that's gone up so long. It's gone up so far. It's had so many candles that have gone up. It has to turn around now. And they say, well, I'm looking to sell that now. And I sort of say, well, what's the criteria? What rules are telling you? What's the strategy that's telling you how to sell?
Yeah,
Well, and they can't really back it up.
yeah,
And
yeah.
I think it's really, really dangerous territory to get yourself into,
Yeah, it is, and that's why I like the fact that we've got rules that just put a framework around the decisions that we make. Because if you look back after a trade, you can at least see that you tried to follow steps along the way to apply
Yeah,
consistency, consistency
yeah,
in the decision making. Because if you trade just on, oh, it's gone up so long, it must come down. If you
mm.
you know, there's yeah, there's no continued, like, well, it's consistency is the word, isn't it?
Yeah,
There's no
yeah.
consistency there. So yeah, what do you reckon about the dollar yen this year then, Peter?
I don't know. But it is for us now as experienced people. When people talk to us like that, it just we have to kind of just almost like humor them a little bit, and then
Yeah,
just walk
because
away and be
yeah, exactly.
thankful.
Yeah, you
Be
don't want to.
thankful that we've got a
Yeah,
system.
exactly, because you don't want to. We're laughing and joking, but we're not taking the mickey out of somebody. It's just that
No,
because of what we now see as trading, we can't answer that question anymore.
no, no, because I think the other thing as well is that's because we've learned as part of that process to take away, extract all of the emotion.
Yeah, yeah,
Yes, we get odd little bits and pieces like we touched on with your trade, but we've got processes and safeguards there to protect us from allowing that emotion
to,
to
to
deviate from our
yeah, and to stop it to taking over. I mean, there'll always be some emotion, a little bit of emotion, but as you say, you don't want to be making key decisions based on those emotions, do you?
yeah. And again, it comes back to, having done the back testing,
Yeah,
having everything in place, making sure your trading rules there, optimizing your trading plan so that when you start trading and to go through the demo and then where you are in the live trading, you know, I mean, look, I mean, this is, you've been trading for a good while now, live trading, and I know, Stephen, it's like from your results and when we talk about trades, there's your emotional levels and or emotional attachment to a trade is, you know, it, there's no real difference between when you've lost a trade and won a trade. You kind of go, okay, yeah, I won a trade. No, okay, I've lost a trade. So there's no emotional attachment to it at all.
and like and we sound like a broken record, but that comes out of like all of what's gone before. That's why it's important to have that, like, back testing of a
Yeah.
strategy, to have those results, to see how many consecutive losses you suffered in your back testing, to give you an idea of what you should expect.
Mm.
It's not a perfect reflection of what would have happened, the back testing, but it's the closest you're ever going to get. Um, so that's why it's important to do all of those things, because in
Yeah.
those moments of price approaching a stop loss or whatever, you're going to be emotionally tested. Like, I'm
Mm.
getting out. I'll be panicking. Your emotions are going to be taken over. Whereas I was watching it and I was
Mm.
thinking, if it stops me out, it stops me out. I've made a
Mm.
commitment to this trade now, and I've done it for all the right reasons. Put my stops where they are for the right reasons, and yeah, and then it's
Yeah.
measurable. If you apply the same, if you apply the same approach each time, then you're reducing the variables, and you can measure. You can actually compare things properly then.
Mm. What's that? One of those little things, set and forget.
Yeah, well, that's it. Yeah, that's it. That's it. That's it.
Set and forget. So
Oh,
anyway, that sort of just more or less wraps up the episode for this week. Anything exciting going on in the week ahead for you, Stephen?
look, just a bit of, let's see what the Japan pairs, the yen pairs do after that big movement. Just let that all
Mm.
settle down. I've got a couple of levels that I've got my eye on the
Mm-hmm.
pound dollar. I'm waiting to see what happens there. But apart from that, just business as usual, mate. And yeah,
Mm.
just keep turning up and do my analysis.
Yeah, well, I mean, it's very clear there, Stephen, that you're just sitting back and you're doing the right thing and letting the market come to you.
I'm
And
trying to, yeah.
that's no, you're doing it, and as you just say yourself, if you're being really honest with yourself, you're getting better and better at it, and that only comes through just experience.
Yeah.
with
Yeah.
all of these things. Experience is practical experience is invaluable. So as we just sort of go to wrap up, as we like to say, please be part of those 10% of traders that 100% trade your trading plan. So until next week, have a great week, Stephen. Thanks,
You
everybody,
too.
and we'll see you next week.
Cheers,
Bye-bye.
Peter. See you, mate.
Bye-bye.